Hello and welcome to your own channel. Let's talk business once again. As always, I'm excited to have you here. In this episode, we are going to discuss London Matters 2020 report, an extremely important report to understand how London market is performing. The London Market Group, LMG and McKinsey launched the London Matters 2020 report on 19th May 2020. And as I said earlier, this report covers a comprehensive update on the London insurance and reinsurance markets position between 2010 and 2018. Please keep in mind that this report does not analyze the impact of COVID-19 pandemic. So as always, there is lot to know and lot to discuss. So without waiting more, let's start talking business. So for those who are new to my channel, I am Ravi Shankar. I am having more than 16 years of experience in business analysis, largely associated with P&C general insurance domain, currently practicing in Lloyd's of London. If you have any queries related to this video presentation or my previous video presentations, you can reach me at my Hotmail or my LinkedIn profile. I'm also available on Twitter. Once again, thanks a lot for all your email, all your messages and all your suggestions. I really love them all. So before discussing the London Matters 2020 report, let's first understand why this report required in the first place. Let's discuss the history of this report and the central idea behind this report. Well, in 2014, the London Market Group or LMG was clearly seeing the initial sign of declining share of global premium that brokers bring to London. Secondly, the growth of alternative centers such as Bermuda, Singapore and Zurich were picking up gradually. And finally, the growth of alternative capital was challenging the London insurance market position as an industry leaders. At that time, even though the London insurance result was satisfactory, but LMG and other market stakeholders have developed a sense of restlessness about the market position as a leader. At the time, some of the key questions for which LMG was seeking answer were: is London market share of global business falling? Is London market being an important contributor to UK economy? Most importantly, what do customer and their broker want? And fundamentally, does London market still matters? So LMG realized that they were missing some of the very basic set of facts and insight that would allow them to reach to the conclusion and validates some of their assumptions about the deteriorating position of London insurance and reinsurance market as a leader. In absence of those facts and figures, they can only speculate on the trends, but they were not having anyone that can provide the definitive answers to their burning questions. Steve Heron, then the CEO of LMG, decided to perform a comprehensive research of the London insurance market's position in global insurance and reinsurance market, the trends affecting its positions, and the issue and opportunity which London market can exploit. So they commissioned the Boston Consulting Group in order to find the answers of some of their burning questions. And what were their burning questions during 2014? How is the London market business best defined and how big it is? Very fundamental and important question. How has the position of London evolved in relation to the global insurance market? What economic impact does London market have? Why do London market customers and their brokers seek to place insurance in London? What is their unique propositions? Are the London market delivering the service they need? That is another important question. What micro trends affecting this demand for the product offered in London market? And finally, where do the threats to the London market position lies, and what are the opportunities that London market can exploit in order to grow? In order to find the answers of these critical questions, Boston Consulting Group did a comprehensive analysis of the London insurance and reinsurance market and published its first report in 2014 called London Matters, the comprehensive position of the London insurance market. This report in 2014. So far, there are 3 comprehensive reports published. And this time in 2020, McKinsey studied and analyzed the London insurance market in depth and published its finding in report London Matter 2020 on 19th of May 2020 along with LMG. So we are talking about this report. That's all about the quick history about the London Matters report and some of the fundamental points on which the report started delivering its value. Let's move ahead and see what we have in stock in this series. Since London Matters 2020 report is a very comprehensive report, covering the entire report in one video presentation is not a good idea. So I'm planning to cover this report in 4 or 5 short video presentation for easy understanding. So we'll be talking about the size and the composition of the market, and in this section we'll see how the market is growing, which sectors are changing, and where the premium is coming from. In the second part of the series, we will cover the London market contribution to UK and global economy. And in this presentation, we will try to cover how the London market plays a fundamental role in supporting and stimulating the global economic development and growth through the risk transfer and advisory services. We will also touch the global capital base and players in London market, in which we will talk about the capital that underpins the London market underwriting. We will look from where these capitals are coming, why people invest in London, and from which sources the capital is provided. We will also analyze the profiles of the carrier writing business in London market and how these carriers evolved over the period of time. We will also discuss about the various initiatives running within the LMG group, which is like modernization, business environment, talent and diversity. And finally, we will also talk about the other aspect of this report. So this is how I'm planning to explain the report in a smaller and easily digestible chunks. Moving ahead. So before we deep dive into the various findings in the London Matters 2020 report, let's quickly understand what the London insurance market is all about first. The London insurance market is a subscription market in which various entities participate. And what are these various entities? So these are UK domiciled insurance and reinsurance companies, UK subsidiaries and branches of US, European and international insurance and reinsurers, marine P&I clubs, and of course at last the Lloyd's syndicate that is backed by the individual name and the corporate capital providers. So just a brief history about it. Earlier, almost all the insurance companies in the London market were member of either the Institute of London Underwriter, or which we can also refer as ILU, and the London International Insurance and Reinsurance Market Association, which we also refer as LIRMA, right? Or both the organization. LIRMA went away after being merged with ILU in 1998. Now the main body is only ILU. Well, if you go further down into the history, the ILU stands for Institute of London Underwriter, as I said earlier, is the trade association for the insurance company writing marine, aviation and transport, which we also refer as MAT business, and is the oldest body incorporated in 1884. Whereas LIRMA stands for London International Insurance and Reinsurance Market, is the trade association for the international insurance and reinsurance company writing primarily non-marine insurance and all class of reinsurance in London market. So here is a quick background about what is London insurance market. Let's move ahead and see some of the key highlights from London Matters 2020 report. Now here you can see that the London market remained the largest global insurance and reinsurance hub with $110 billion of gross written premium in 2018. And here you can see the size of the London insurance market as compared to Bermuda, Zurich and Singapore. So you can see London insurance market is writing 110 billion of gross written premium. Bermuda is around 51 billion, Zurich is 25, and Singapore is just 1/10 of the London insurance market, writing 11 billion gross written premium in 2018. So annual growth of London market's P&C line, which property and casualty financial line, is growing at the rate of 8.1% since 2017. Annual growth in business managed by the London market broker and written overseas is growing at the rate of 13.8%, and the share of London market premium from US overtaking the UK and Ireland as the largest source of income, which is around 36%, means that US contribute 36% gross written premium in 2018, overtaking the UK and Ireland. Moving ahead, the London market is the substantial contributor in UK and global economics. So if you can see, it contributes 23% of the London city GDP in 2018. It contributes total of 37 billion pound in UK GDP in 2018, which is now up. Earlier it was 32 billion in 2015. So you can say that it was 32 billion over here. Now it is increased by 37 billion. So it's a significant contribution into the UK GDP and the global economics. Let's move ahead. So as I said earlier, the London Matters 2020 confirms that the London market remains the largest global insurance and reinsurance hub. It continues to develop as an attractive location for insurers. Large specialty buyers continue to seek out the capacity and expertise that London provides. The gap between the London and the total written premium in Bermuda, Switzerland, and Singapore combined has widened from 16 billion US dollars in 2015 to 23 billion US dollar in 2018 when it comes to the gross written premium. So you can see the gap between these competitors and the London market has been increased from 16 billion to 23 billion US dollar in 2018. So it's a significant growth when it comes to the growth of the London market as a whole. Let's move ahead and see some of the other aspects of this report. So here, the share of London market in global insurance and reinsurance arena. So when it comes to the commercial insurance, London is 52 out of 819 billion global commercial gross written premium. When it comes to the reinsurance, London is 24 billion US dollars out of 188 billion US dollars in terms of gross written premium when it comes to the P&C reinsurance market. And when you combine this P&C reinsurance and the global commercial insurance, then London sits at whooping 76 billion gross written premium out of 1007 billion global market gross written premium. So it's a huge number, it's a huge contribution which is growing. So if you can see over here, the London share of the global commercial reinsurance and insurance market has remained steady over at 7.6% since 2010. London market share of commercial insurance has been grown by 1% point, and its shares of the global reinsurance market has been fallen by 1.7%. So this is the area of concern from 2007 till now, because London market is losing its position as a leading place where the reinsurance is placed globally. And there's a reasons also for this. And a couple of reasons I would like to mention here is the local reinsurance business stay local rather than coming to the London market. That is one of the reasons. Protectionist trade policies, several countries restricted London's local access to their emerging markets. The another important aspect is the reinsurance is capital intensive, and London cannot compete with its lean operator in Bermuda or ILS player that has fewer overheads. So that is another important aspect of falling reinsurance share of London market. So regulatory support is another important aspect where the regulators in Bermuda and Singapore have supported the growth of alternative capital in their respective countries. So these are some of the factors that is affecting the London market reinsurance position globally. And the LMG is actually concerned about this point. So we will also talk about this point in detail in subsequent presentation and slide. Going ahead, let's talk about the share of the global specialty line. So you can see here the size of the global specialty market has declined by 10% between 2010 and 2018 to 36 billion. Now, London's share of specialty grows despite the fact that the overall global specialty line market shrink. It is worth to note that the London market achieved this growth despite of pricing and profitability challenges. On the other side, the aviation and marine, which has shown 12 and 5% growth in their respective sectors, the size of the global marine market has remained relatively flat despite of growing world fleet and increasing size of vessels. So you can see over here there is a growth of 5 basis point in marine portfolio, whereas 12 point in the aviation side. Energy remain constant. There is a reason behind it. The global energy premium also saw a mild contraction, if you can observe over here, -1%. And this is because the lower oil prices and the soft upstream market reduced the premium. Also, we have experienced some of the largest merger and acquisition within the upstream companies in 2017 and 18. So all this constitute the flat growth within this sector, the energy sectors, resulting there is a slight decline in the gross written premium in 2018. Moving ahead, the London market share in the global P&C, and this is quite interesting to understand. If you can see over here, the share has been increased in casualty and financial line by 7% and in property line by 8%. So the London market gains share within the property and casualty market. Much of its growth has been acquired in recent years, and there is a reason. So the gain share within the property and casualty market is due to the complex risk. Now what does it mean? So some type of complex risk in financial line that match London expertise have become harder to place in Europe or in US. It is very difficult to find the insurer with that kind of a specialty. So these include high limit, high excess directors and officers policies, cyber, errors and omission policies. So it is very difficult to find anywhere in Europe or US. So London becomes the best place to find this type of policies, and that so contribute its growth within the P&C and of financial line. Its expertise to provide risk transfer in difficult market is also responsible for the greater growth in P&C and financial lines portfolio within the London insurance market. Going ahead, and here we will also talk about one of the important aspects of the London insurance and reinsurance market in context of the managed business. So if you can see over here, we discuss about it. The total gross written premium in 2018 was close to 110 billion US dollars, out of which the core London market premium was around 75.9 billion US dollars. 11.8 billion US dollar is coming from the company managed business, and then 22.7 billion US dollar is coming from the London broked businesses. Now what are these lines? Let me explain you. Now, when it comes to the company managed businesses or ILU business written overseas and overseen or managed by the London market, what does it really mean? So this part represents the premium that is written in overseas or regional UK offices but subjected to oversight and managed by the London operation because of their expertise. Now, this part is basically the managed business by the London market brokers. And this represents the premium that is written overseas or in regional UK offices but brokered by the London based broker teams. So when it comes to the core London market bifurcation further, you can see that 2.4 billion US dollar is coming from P&I Club, which is reduced actually. We'll talk about it later. And 26.1 billion is coming from the company market, whereas 47.4 billion is coming from the Lloyd's. So that is the overall composition. Let me bring some of the key highlight from this report. Is premium return in the core London market has grown steadily between 2010-2018 or CAGR of 2.5%, whereas this growth accelerated between 2015 to 2018 at the rate of 3.7% CAGR. Managed business has seen a faster growth rate with 12% CAGR in 2015 and 2018. Now, what is this managed business? So now we already discussed about this managed business portfolio, which is 11.8 billion plus 22.7 billion. Now, let me quickly give you some idea about this managed business. So before that, right, we have to understand that there is a rapid shift in the London market, and it is no longer just a place to place the difficult risk anymore, right? Apart from placing the difficult risk, it also plays a different role. So there is now an important interplay between the London markets, three main components. And what are these three main components? The capital to underwrite risk, that is one thing. The advisory services to mitigate client risk and provide support to overseas branches and subsidiaries. That is another thing, very important. I will discuss about it later. And then the third one is about the risk acceptance and placement. So the London Matters 2020 report finds that the advisory service has been the primary driver of growth in managed business between 2013 and 2018. Now, what is this advisory service, you might be thinking? So say for example, in case of broker services, the critical input London provide is reportedly in the modeling and the advice given, okay, not in handling the transactions or collecting claims. So say for example, here for the broker service point of view, the London market is working as a consultant to provide the modeling and the advice. And when it comes to the underwriting side, while the business may not be placed in London, local and regional offices look to their London colleagues for data, advice, and expertise. No matter where the business is written, in maybe a US or Europe, but they look their London market colleagues for the data, advice, and expertise in order to analyze the risk. So that service is falling within the advisory services, and this advisory services is the primary driver of growth in managed business within 2013 to 2018. So going ahead, and this is one of the interesting slides, the premium inflow in the core London market in 2018 in terms of the US dollar billion. So the specialty line is around 14 billion, the PNC is 38 billion, and the reinsurance is 24 billion, which we have already talked about. Now further bifurcation within the specialty line, 8 billion gross written premium is coming from marine, 4 and 2 billion gross written premium is coming from energy and aviation. When it comes to the PNC, where the total gross written premium is 38 billion US dollars, 17 billion is coming from the property, 9.5 billion is coming from casualty, 7.5 billion is coming from the financial line, and 2 billion respectively from others and motor portfolio. Reinsurance constitute 24 billion as we discussed earlier, and this is the area of also concern which we'll discuss in our next video presentation. Well, that's all from today's video presentation. I hope you have gained some knowledge from today's session. Thanks a lot for your valuable time. Goodbye and take very good care of yourself. Bye, and I will see you soon in next video presentation within this series. Bye bye and take care.